Thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We discuss on a daily basis what's impacting mortgage rates. Sometimes those items could come from the economic calendar, could come from headline news or geopolitical. But even more confusing, sometimes the market sentiment changes, whereas good news is now bad news and vice versa. And most people may not understand what or that may be fondness and know what's going on here. So we try to delve into it, give you an explanation as to what's going on, and hopefully give you the information you're seeking. Whether for you might be somebody in the industry just kind of looking and trying to follow along, or somebody who might be watching rates as they may be looking to buy a property or perhaps looking to refinance. Hopefully, this will give you the information you're looking for. A little bit about myself is I am a loan officer. I do work with a national lender. We do lend in all 50 states. So I love to be able love any opportunities you might have if you're looking to refinance or purchase. So please reach out. But more than that, we like to be a resource for you folks. So if you guys got questions about anything, we're here to help. So without further ado, we'll just jump right into today's report with looking at the economic data. Today is probably the second most important day because this week is Jobs Week, and this is the day that we get from the Bureau of Labor Statistics data. But of course, Wednesday with the Fed announcement was the biggest day. So this is right behind it. So we'll start off with the average earnings on a month-over-month basis for the month of April. So March had a revision upwards from 0.4% to 0.5%. Forecast was coming at 0.4%. However, it came in a little disappointing at 0.3%. So hopefully that means wages are stabilizing a little bit as we've been seeing a pretty big spike in there. So to move on, we got the non-farm payrolls. So the previous report was revised slightly lower from 431,000 down to 428,000 in the month of March. Forecast is calling for about 391,000, and you can exceed that by up to 428,000. So a decent number right there. Average work week in hours basically remained unchanged. So 34.6 in March, even though there was an expectation of a slight uptick, it came in the same. Same thing with unemployment rate. 3.6% came in at 3.6%, even though the forecast was supposed to show a slight improvement to 3.5%. Still a decent number right there. Now, a number that's not showing here is the participation rate, meaning that people are actually participating in the employment section that are eligible to be in there. That did dip 0.2%. So that is something that people are watching, and it can be a concern if that continues to drop. That means basically people are leaving the unemployment, or leaving the employment, or are eligible to work but are leaving the work. So as we experienced this last year or two, we had the Great Resignation area, and there's talk that maybe that could be maybe happening again. So that is something we'll watch. Now, yesterday the markets reacted pretty negatively. Dow, both mortgage-backed securities as well as stocks, and today is no different. Yesterday, part of it was on that productivity and that labor costs report that came in. That labor costs came in pretty high. The concern is that the Fed, when they announced that they're the 75 basis points off the table, that most likely they'll go up 50 basis points. Some investors are feeling that might not be enough to really curb inflation, and that could put us into a situation where we might have stagflation, and that soft landing may not exist. So right now, there's not a lot of faith in what the Fed is doing right now, and so the markets are reacting. Today is no different. Stocks are down, as with mortgage-backed securities. So we'll take a look here at mortgage-backed securities and just check out the volatility today. Right now, we're down 30 basis points. So we started off, and as soon as the jobs release came in, it dropped dramatically. However, we did get a price improvement. So a lot of lenders did price improvement. But since then, we've kind of had a lot of ebbs and flows here. And a lot of people think that as we got price improvement right around here, that perhaps we might get reprice for the worse again. So those who did the price improvement may come in with worse pricing, reprice for the worse here. So stay tuned. Right now we're down about 30 basis points, so pricing again, or mortgage rates are in a worse position or worse pricing than we saw yesterday. This could be probably equivalent of approximately about 1/8% in the rate difference is what that will make. Um, so as you can see, we're off from the lows, but we're off from the earlier highs as well. So somewhere in the middle, but still down for the day. And then yields, we're at 3.12 now. So we keep spiking up here as well. So one of the big things is we may or may not see much difference or holdings here. Is that we're also seeing some illiquidity in the markets. Something I just want to go back and touch on. Illiquidity in the markets. What does that mean? Is that there's a big gap right now between what the sellers are willing to sell for and what the buyers are willing to buy for. And right now there's that gap there. And so as they're not as they're kind of a holding pattern, we're not seeing as much activity in the buying and selling as we're moving along here throughout the day here. But as you can see here, treasuries are up 3.12, which is adding more pressure on the mortgage-backed securities. So last but not least, we'll touch on what's the average rate for conforming loan limits. These do have points built into them, and they're pretty much a day behind for the most part. So stay tuned because they're based more on what after yesterday's reaction than what's going on currently today. The 30-year fix is now at 5.64, and the 15-year is now at 4.91. So the 15-year is approaching the 5% range, whereas the 5%, the 30-year is approaching, between mid to high fives right now. So stay tuned. Obviously, those are getting a bit higher, and as we proceed throughout the year. Don't think it's going to continue going up as dramatic, like another 2% like we saw in the first 4 months, but I think we might go up a little bit more, but probably not quite as much. I don't think we'll see as big of a jump there, but again, time will tell. And again, if you guys got questions or anything we can help you guys out with, please feel free to reach out. We're here to help you. In the meantime, if you could do us a favor and hit that like button and share, we greatly appreciate it. We like to be able to help out as many people as possible. We thank you very much for your time and hope you guys have a wonderful day and weekend. And we look forward to see you guys on Monday's video. Have a great day. Bye bye.